The pressing conversations taking place today are shaped under the theme of big bets, inflection points, as well as key trends within the ecosystem. Our upcoming panel is quite well versed and well positioned across the world so that we can receive the finest in global diverse perspectives as we engage big bets and key trends and looking to how different jurisdictions and regions can shape their own realities. The panel will be moderated by Moritz Pretorius, who is the Chief Strategy Officer at PASA. For our panelists, as they make their way onto the stage, please welcome Jane Larimer, the President and CEO at Nacha, Christina Logue, the Chief Financial Officer at Payments Canada, Andy White, the Chief Executive Officer at Australian Payments Network, and Steve Wiggins, the Chief Executive at Payments New Zealand. Ladies and gentlemen, please welcome our panel.
Well, what a wonderful opportunity to welcome you back, and also for me to welcome this very distinguished panel that I have here today, 3 CEOs and a CFO, and they all on top of their business in their various jurisdictions. I think we are enormously privileged to actually have you here and to learn from you, so thank you very much for coming all the way and imparting your wisdom with us. My job is actually to get you speaking as quick as possible. So I'm going to try and really minimally interfere and steer. I think everybody is curious about what's happening in your spaces. What are you busy with? You know, we've spoken a little bit beforehand, and it is clear it's also not always plain sailing. So what I'm going to ask you is to give a little bit of the good, the bad, and the ugly. But in main, I think we're all interested in where's the big focus in your particular jurisdiction? What is important for you? Why is it important? And you know, for us to kind of learn from that. And I'm going to start here with Steve Wiggins, the All Black sitting here next to me from New Zealand.
Kia ora koutou, everyone. And one of the big bets is not to bet on the All Blacks for the World Cup. I tell you, not good. Yeah, well, just looking at the New Zealand Aotearoa's situation in terms of some of the big bets that we've been facing over recent time. About 5 years ago, we removed checks from the system, or should I say the financial institution stopped issuing checks. And what was really interesting, as soon as one did it, the rest followed pretty quickly after that. So the big bet there was, don't be the last institution with checks. And so that worked out pretty well. We then decided to move our core retail clearing system, which is all the heavy lifting of direct debits, electronic credits, put through about 1.6 trillion within the New Zealand context, from 5 days a week to 7 days a week, settling every 30 minutes across the industry as well. So that was pretty significant. We also wanted to take a bet on the fact that from an open banking point of view, that industry-led solutions provide a better outcome. So we opened an API centre in 2019 to bring our version of open banking to market. And I'll talk a bit about the good, the bad and the ugly later on in the conversation on that one. And now we're looking very much at what is the next thing for us, and that's the next generation infrastructure play to bring in the next generation real-time capability, but not focusing on the actual transfer of value, but focusing more on the overlay services that sit on a new piece of infrastructure. And so that's where our emphasis has been over recent times.
Thank you very much, Steve. Moving on to you, Jane, and I think you first have to tell us a little bit about the complexity of the United States, because it's a federal environment. You know, it's very different to what we know in South Africa. Yet, I think there's a lot happening there. The big card schemes and such are all there.
Absolutely.
And just give us, what you're focusing on.
I will jump in. I'm delighted to be here. Thank you so much. So in the United States, we have around 10,000 financial institutions. We have a public sector and a private sector operator. So on the ACH network, the wire system, our check system, and our new instant payments rails, we have multiple operators. In some cases, they interoperate. In other cases, they do not. So for instance, the ACH network, and the CEO of NACHA, and that we govern the ACH network in the United States. Last year, 30 billion transactions, $77 trillion moving through the ACH system. We have our two operators, and what we're really focused on in the United States is faster payments, much like, I think, everybody. But the way we're going about it on our ACH system, we have same-day ACH, so it's multiple settlements a day on the ACH system. And we had RTP, the real-time payments network from the clearinghouse, went live in 2016. Just this July, FedNow went live. But in such a fragmented market where we have thousands of financial institutions, millions of corporates, creating network effects and being able to gear up, it's substantial effort, and it takes a while. So what we're seeing is right now the traditional ACH is still growing faster than same-day ACH or any of the instant payment rails, growing at multiple percentage points a year. So we're really trying to look at creating network effects for the long haul, and how do you bring everybody together and get them moving along on this pathway. So it's an exciting time, but there's a lot happening, and it takes a lot of coordination.
Can I ask you to demystify FedNow a bit for us? Because you've got the clearinghouse with a real-time payment system. You've got FedNow. How does it work? How is it going to interoperate? Will it interoperate?
So FedNow is the Federal Reserve Bank's payment system, instant payment rail. Right now, they do not interoperate, and they do not have plans currently to interoperate. So financial institutions can access either one of them, either RTP or FedNow. And I think that's something that, as you look at scale and how you create those network effects, it makes it more difficult if you don't have interoperability.
Yeah.
I mean, it's what on the ACH side, where we have our ACH operators interoperating, it's much easier to create scale and a network effect, I think, with that.
Correct, yeah, I agree. Interesting. I'm going to move on to Andy. Andy, Australia. I guess you guys already made a big bet with NPP, but there might be a few things that we don't know about. And my question is perhaps also, if I'm correct in my assumption, is it working out for you? How's it working out? What's next? Were there any surprises?
Thanks, Maurice. The Aussies love a bet, so I sort of feel at home here. I did notice that I'm English originally, and one of my fellow English Australians published today that he won at 13-1 the bet that the Wallabies would get knocked out in the group stage of the Rugby World Cup. So he was pretty pleased with that. There'll be a lot of Australians that won't be. I think we've got three bets going on in Australia in payments at the moment. The first one is around payments modernisation. So it is NPP. So that's our real-time payments platform that was implemented a few years ago now. I think that's quite a nuanced bet. So I'd say hopefully this translates. It's a multi. We need a few legs to pay off here. The first one is the growth of real-time payments, and I think to date, when you look at the volumes, NPP has grown quicker than equivalent systems elsewhere in the world, which is really positive. However, it's all about adding additional functionality. So the other legs involve closing down checks. We'd very much like to follow New Zealand. The Australian government has published dates around ending their own use of checks in 2028 and closing the check system in 2030. But NPP needs to provide functionality that replaces current check use cases. The more radical one is the ACH side. So we call that direct entry. That processes around $16 trillion worth of payments every year in Australia. We've started the conversation on closing that down as well, but for that to happen, NPP would need to add significant functionality. And by the way, not just NPP, potentially card systems and so on to replace that. So to me, it's about, that payments transformation involves the real-time payment rail, but also closing down those legacy systems. We should shut things down when we create new rails, is the simple message there. The other part of payments transformation or modernisation is around data. So ISO 20022, obviously, but also what do we do with an open data system that Steve described in New Zealand? We have one called the Consumer Data Right in Australia. Do we use that for payments initiation or not? That's an open question. And then the second and third bets that we might talk about a little more in the panel. The second one is around the regulatory settings on payments. I was in a session this morning on that. I see that as a big bet. You only change the regulatory settings, every couple of decades. So you've got to get it right. You've got to future-proof it. So that definitely is a big bet. And then the third one, I would term table stakes rather than a big bet, and that is dealing with scams. I think if we're not serious about dealing with scams in payments, we're not doing our jobs. Frankly, it's a generational obligation. Scams affect far too many Australians. I'm sure they affect far too many Africans, and so we need to actually deal with that issue.
Thanks, Andy. Christina, so Payments Canada, you've also been on your modernization journey. A lot has happened in the last number of years. I think most recently your high-value payment system has been completely modernized. But you're also busy with a separate bulk system, a real-time payment system. Just tell us a little bit about what's happening and what is impacting your world and what's the big bets there.
Great, thank you. So within Canada, I think our big bet started probably 7 years ago when we decided to embark on our payments modernization journey. And it was quite an ambitious agenda where we decided to look at all of our operating clearing and settlement systems at the same time and modernize them at the same time while delivering a new rail to the country in the real-time rail. It was an agenda that started in 2017 is when it kicked off. The original timelines was to have everything done by 2020, including all the surrounding rules and legislative changes. We're here in 2023, and I'd say we've made it probably 2/3 of the way through. So we've seen modernization on our batch system. So we own and operate the batch system as well as the high value system. We've re-platformed the batch system. We've made changes to the risk framework to allow new participants to join the batch system. On the high value system that you alluded to, Moritz, we've done an entire swap out of the underlying technology. So we had a system that was put in place in 1999. Had run its course, was still being run by a handful of COBOL programmers, which are hard to come by. And a little side story there, I can tell you what happens when all 5 of your programmers win the lottery at the same time. So we can chat about that in the continuity session tomorrow, maybe. So we did an entire application change, an operating model change, along with a risk framework and intraday liquidity changes on our high-value system, moved it to a real-time gross settlement system. And that launched in 2021. We've since launched MX capabilities on our high-value system, and we're now seeing, so those are the ISO-enabled data that flows with the payment. We're seeing more than half of our volumes of transactions going through with ISO data. So that ISO that we just spoke about is actually still one of our big bets, something that we're still looking to leverage as we launch our real-time rail. So that leaves our last big bet. So real-time rail, this is a large one for Canadians. It's really needed in order to maintain a globally competitive nature for our country. And surrounding that are a lot of the overlay services that were chatted about here and everyone else's commentary. So things like fraud, confirmation of pay, those are really big items that we're looking at as a nation, as well as changing our legislative framework to allow more participants to join into our system, which makes things like fraud that much more important when you're opening up your system to more than just the 17 financial institutions that we currently have allowed. When you open it up to different PSPs and different players, it brings a different game to the table. So those are our current big bets.
You know, Moritz,
Thank you, Christina.
can I just
Yes,
make a
jump in.
I'm jumping in right and left. But I was thinking about, as we were all talking about check, being in different places in our journey to get rid of check
Go on.
successfully. Exactly, check for you. You know, we still have, as of last year, 10 billion checks. And we're looking at how do you know, once you move people to electronics, do they have the capabilities? Do we have the capabilities to have that one-for-one transfer? And I think if it was easy to do, it would have happened. But as we talk about all the modernization, all the things we want to do, it's like getting rid of checks seems to be the first step.
There's certainly a lot of social and political issues around removing checks because they don't want to let it go. So within our situation, there were two dynamics that happened that sort of made it a bit cleaner. One, it was the government-owned bank, Kiwi Bank, that was the first to say, we're out of here. Two, when they made that announcement, about 3 days later, we went into lockdown. And so therefore, from a media point of view, that didn't get this upheaval that it probably would have if it wasn't in that unique situation. So I think there was a bit of good fortune or bad fortune, whichever way you want to look at it, around the announcement of that. And as soon as that happened, then everyone had moved on. And of course, we know the increase in digital use through COVID, and that sort of worked to enhance that as well. So a bit of good luck.
Yeah. But while we're on checks, Jane, checks are so big in the US. Are you at all planning to get rid of it? How do you see the future panning out on paper compared to the electronic?
I think it's going to take us quite some time. So we're very market driven. We're not mandate driven or regulatorily driven with new payment systems. What we've seen through COVID and others is there is a shift to electronics. And I think that it's not necessarily, on the consumer side, checks have been declining pretty steadily because there's a lot of different options out there for them. Where we see challenges are mid-sized to smaller businesses, where getting set up on, whether it's instant or wire or ACH, it's not as easy as just getting issued a checkbook.
Correct. Yeah.
And I think that's where there's a struggle. So we know that during COVID, we saw people didn't want to sign checks. The printer sorter, like they couldn't get the repairman to come in to fix the machinery. So we saw then that there were businesses who took the time to set up using ACH, using wire and electronics, and they didn't move back. Once they're on electronics, they're happy. It's just the investment of time to get there.
Yeah. One of the things we also very glibly talk about, all four of you, is ISO 20022 and data and such. And, it's clear there's a lot of movement in that regard, but there's also a lot of challenges. And you guys indicated that having it done in the middle is far from actually unlocking the potential. Just a few views on that. Christina, if I can start with you and then on to Andy, perhaps.
Yeah, it's a really great question, even when you're just talking about checks. And I was thinking, as a small to medium business, you rely on checks, because it's a cost-effective way, it's easy to do. Also because it has an element of data on it that you can't get with some electronic payments, right? And so when I think about the Canadian environment, when would we ever be ready to eliminate checks? It would be when we have a system with real-time capabilities that could also have the data that goes along with it, because I think it's a very important part. Data today is the new gold or the new oil, right? Like data is so important. And even though our systems, like you said, are enabled with this feature, what we're noticing in Canada, what we have to do a better job of is education. So educating at not just the FI level, but at the corporate level, ensuring that you're in there with the corporates, that the treasury management systems and the ERP systems are all enabled to be able to really take advantage of this liquid gold that's out there in the form of data.
Yeah. Andy?
Just to add in, we managed the program to migrate ISO 2082 or to ISO 2082 for high value. In Australia, our numbers weren't quite as high as Canada's. We were around about a quarter of messages on day one, so not bad for day one, and certainly seeing growth from there. What's quite interesting, I think, is the way that different banks have approached this, and I'll sort of focus in on banks and then maybe talk about the corporate layer. some banks have gone for the full ISO 2082 processing capability off the bat. There's a couple of large American banks who've definitely done that. So they're sort of processing 90% of their transactions using the full ISO 2082 data set. And they've done that deliberately, strategically, because they see the straight-through processing benefits, the benefits in terms of AML, KYC, sanction screening, all of those sorts of things. There are some banks who are the exact opposite of that. They've gone for the bare minimum. They're taking in an ISO 2082 message, but they're dumbing it down through translation and not using that data. I mean, I think both of those strategies are valid to an extent for a period. What will probably change that and also potentially change the corporate landscape is the announcement around harmonisation of ISO 2082 more globally. So that's I don't think I'm giving anything away here. That's coming out from the CPMI shortly with a target date of 2027. We're fully behind that because originally when we started managing that program, our ideal was to harmonise between cross-border, domestic high value and real-time. We've done the first two. The real-time system uses an old ISO 2082 format. So if we can get that to the same harmonised standard, I think that opens up all sorts of opportunities for corporates. We've deliberately focused on the bank-to-bank migration. But if I'm a corporate, I think the ideal here should be about processing a payment the way I want to, based on a set of business rules. I need liquidity management for this payment, or I want immediacy for this payment. And you can start to do that when you have the same ISO 2082 format. You stop thinking about a rail. You just think about the capability that you need. And I think that could be pretty powerful, and it's also sort of preempting the resilience panel tomorrow, but it's helpful from a resilience perspective because different rails can then fill in for each other if there's an issue.
Yeah. I think this whole harmonization or convergence topic, Andy, is quite interesting. And if I can stay with you for a moment, you indicated that already there's barely a distinction between a high value payment, a low value payment. It's the same system that processes it and so on. So you've gone pretty far down the road to actually harmonize the systems, and I think we're quite interested in what were some of the lessons. How do you think about a payment being processed in that way?
Yeah, so just to be clear on that, there's no sort of limits that say, if it's above this value, it's got to be processed through the high value clearing system. So we see reasonably low value payments processed through that. We see reasonably high value payments processed through NPP, the real-time payment rail, or through our direct entry system. And I think that has to be the right answer back to that point about flexibility. That I should be processing a payment based on what I need. If I don't need immediacy, then it might be fine to process it through direct entry ACH. And particularly if it's a bulk payment, it's payroll or something like that. Much as I love my employees, I don't need to pay them immediately. I just need to pay them next Tuesday. So unless there's a a value add reason for going real time, I won't necessarily do that. And I think back to the point, I think that is important in terms of resilience, that you've got then different payment rails that you can use. If one's down, you should be able to easily switch to another one. So I think it adds some capability there. In the context, though, that, per what I said earlier, direct entry is probably a bad example because in our case, that's data poor compared to the other systems. So we don't really want to be pushing payments in that direction. Particularly in a sort of in thinking about fraud and scams where they might be better managed through data-rich payment systems.
Yeah, thanks. And Christina, if I can jump onto you, it seems to me Payments Canada has thought a little bit differently about convergence or harmonization. You still have a clear batch environment, a clear real-time. What's the reasoning behind that?
So the real-time rail, there is a longer-term strategy to think about, not the rail underneath it necessarily, but more the payment type. So it would be more around everyday payments and high-value payments, and sort of move to this notion of two different types of payments depending on the need of the user. So we haven't gotten through quite how we're looking at the technology that underlies it all, but I don't see a world necessarily where Canada would have one clearing and settlement system, because they have different risk controls under them, and they're governed differently within Canada itself. But there could be a world in the future where we kind of have a notion of everyday and high value payments that we move to.
Yeah. Okay. Good. Jane, ISA 20022. Back to that topic. In NACHA, in the context of America, big corporates. How ready are we to actually unlock the full value?
So we're in the middle, well, not in the middle, I think we're toward the end of the wires, so FedWire and chips going to ISO 20022. That's been a 10-year journey, 9-year or 10-year journey. And so the financial institutions are really heads down trying to get ready for that. We've been looking on the batch side and the retail payment side to see if there was a desire to be moving forward on retail. And what we heard back, so there are multinational companies, a few, and there are a few multinational financial institutions who are very well poised. But what they usually do then is provide translation services to their corporates. Because what we also see is with everybody but the very top of the corporate peer, their ERP systems, treasury management, if they have all that data, they can't use it. And that's what we see with the FIs as well, who are, in a lot of ways, they're either, if all of this data comes in, how do we ingest it? How do we actually utilize that data? How do we then give services to our customers? And then the corporates are saying, we can't utilize it. So there's a lot of needing to modernize all the pieces below it. On the corporates, the ERP systems, the core platforms for the financial institutions. If people haven't modernized their platforms, in a long time they still are on COBOL, probably. So it's a long tail and it's going to take a while. What we were told was maybe let's think about this after 2025. But for now, there's not an appetite to be moving the retail system. That would be another 10 to 15 year project. In the US, the ACH is so embedded. It's embedded into corporates. It's embedded into the financial institutions all the way down. So I think it would be exponentially harder than moving wire.
Yeah. And then I guess convergence also takes a very different pathway in your jurisdiction than
Absolutely. So
Australia.
we continue to invest in the batch system. Fed ACH just had a payments platform. Their ACH modernization, their AMOD project, that was multi-year to go on a whole new platform. So they've invested in that. The financial institutions continue to invest. I mean, we're moving the number of payments that are moving through the system, and we have some data rich. We have 9,999 addenda that can move through with one of our payment types. We have multiple payment types, and we're settling multiple times a day. So I think we've started from the inception of the ACH to now. We've invested and grown it and made it so that it had, whether they're internet payments or cross-border payments or whatever they are, that we've added these capabilities to the network. Our healthcare EFT that's embedded in the law comes through at one of the ACH payments. So there's just a lot of functionality within our ACH, and so the desire is to have one-off instant payments to be able to when time is up, when you want to have that there and settled. Then we have the ACH, and then we have whether it's Venmo or Zelle or where you have real-time messaging, but you have settlement is happening in a lot of different ways. Could be card, could be ACH, could be real-time underneath it. So we just have, I think we want to have a lot of options, and we're still all focused on check. How do we get the check on?
Steve, let's talk a little bit about the API project that you guys did. I think 3 years ago when you started.
Yeah, it was. It was off the back of looking at our payments modernisation plan, which we kicked off in 2020, and said, right, what are the enablers for a modern payment system? And we sort of looked at, and the industry said, right, we reckon the standardisation of APIs is the way to go. And this was just before it all started to unfold in the UK with the open banking implementation entity. So We started the journey with the Payment Initiation API and then followed off with Account Information API as well. And we have started to build that out. We're up to about version 3 of the standards at the moment. So what we have found over that time, because the whole thing has been very industry-led, that we have been really, really good at building standards, but where it's been really difficult is third-party fintechs having a bilateral commercial arrangement with a large bank. And so the thing that we couldn't conclude without breach of certain commerce laws was develop an accreditation regime. We couldn't come to an agreement on risk and liability, so all that stuff needed to be dealt with bilaterally, and that's the thing that has been really difficult. And then along comes the consumer data right, or we call it a customer and product data bill. And so we're saying, well, is that going to fix it? We don't necessarily think we are, so we are going to just plough ahead and continue on to see if we can sort out that accreditation and the risk and liability point of view as well. So there's been a lot on the go. We've got really good take-up from the fintech community. We've got a lot of fintechs playing in the sandbox, building their propositions ready for it to go. We've got propositions in market. We just don't have the scale. So it's been good. So part of the big bet for us is, what's that government regulation going to do, and is it going to undermine the work that the industry's done over the last 5 years, or will it make sure that that is taken into account with that new regulation as well? Yeah. So that's a bit of a risk for us.
Yeah. Is it working out for you as you planned it?
Other than more partnering between third parties and banks, everything else has gone really well. We've certainly demonstrated the propositions that can be delivered off open banking, particularly around that, and then starting to look at how do we integrate open banking data with open energy data in terms of what are those outcomes that can drive greater outcomes for net zero outcomes for particularly small to medium businesses. And if you're interested in that sort of topic, look to the UK where they're doing that. There's a program set up called Bankers for Net Zero, and that's doing exactly that, looking at the open banking data, combining that with open energy, because there's a lot of common constructs that can be used across those different industries, and then they're combining that so they can demonstrate real benefits that are coming through. It's really cool.
Okay, great.
Can I chip in?
Jump in.
Because we're probably to blame for the consumer data right coming to New Zealand.
Yeah, thanks.
Because it's an Australian invention.
Scott Farrell, wasn't it?
It was, yeah. I actually think it's a really good design because it's unlike open banking in the UK, which was very focused on banking, hence the name. The consumer data right was designed to be a whole of economy type solution with the consumer at the centre, and it's done banking, and it's now moved on to energy, which is also live, and there are thoughts about telco and superannuation, which is our compulsory pension scheme. So very good from that perspective in terms of creating a broad data lake. I think the interesting bit, and this is a bit like the story when you look at open banking globally, in terms of the different drivers for open banking. In some countries it's been financial inclusion, in some cases it's been like the UK, competition. It was a deliberate move to try and get competition against the big nine banks. I think for us, we're at a bit of a sort of tipping point in terms of understanding what next for the consumer data right, particularly in terms of what gets termed action initiation. So there is an open question as to whether we would initiate payments through the CDR. It's an open question because the UK had payment initiation largely to compete against the international card schemes. We already have competitors against the international card schemes. We've got a domestic card scheme. We've got a domestic real-time payment rail. So there's a real question as to, do we need another rail, and is that just going to add complexity rather than simplicity? And the sort of more economy-wide question there is, does the average Australian get more benefit from, say, account switching, being able to switch my energy provider or my telco provider or my banking provider, than they do from payment initiation? So we need to really sort of think that through and work that through.
Yeah. Christina, Andy, you mentioned it. Steve, you mentioned it. You all three of you spoke about overlay services. So the picture I have is, there's your core financial infrastructure or clearing capability, and then various overlay services on top of that. What kind of overlay services? What are you looking at? How must it work? How must it interact?
We're looking at where the view that we've taken is our existing system, if you like, our retail system, we just can't keep adding layers on top of it because it's really complicated, really expensive. So part of the view of the next generation infrastructure players, because those next generation systems have got a very light core that just sort of have some very common capabilities such as central fraud management, request to pay, proxy identifiers, those sort of things. That's all it does. And then on top of that, you can put the overlay services because it's a lot easier to interface with a lighter, smaller core. So some of those earlier real-time deployments had quite a monolithic core and it was really hard to penetrate, which has moved on quite a lot over the last 10 years that we have found. So that's why we're needing to move, because you can't just keep putting it over the top of that. And a really good example of that is around fraud management. You know, putting in place something as simple as a confirmation of payee over the existing set of kit that we've got is just really complicated. But so the next gen would be a lot more straightforward in comparison with that. So it's more about just making it more flexible and being fit for purpose for the next generation, because what we've currently got is not. Yeah.
Christina?
Yeah, I'll just chime in. We very similar utility services I think we all talk about in our jurisdictions. The stance that we take at Payments Canada is that we will only offer a utility service out to the market. So we're not in the business of offering any type of competitive service. So it's really how do we enable and enhance the rail to get the benefit to all users in an equal, fair, and transparent manner. So something like centralized fraud, you think is the perfect example of that utility service where the network effect that we spoke about earlier really comes to fruition when you can accumulate and consolidate all of that fraud data in one centralized service to the benefit of the end user rather than just one FI holding the data that they have in themselves. So think about pooling the information. So we're taking the approach of really utility service provider.
But, can we ask about that in
Yes,
different jurisdictions?
go for it.
So what we hear from financial institutions is there is a strong desire for data sharing. And then when you ask, okay, so let's share data, there's not a strong desire to actually do it, if you know what I mean. So there's a desire to have a capability, but people feel, I think, shy about sharing their own fraud data. I want yours, but I'm not sure if I want to share mine. How are you approaching that?
So our big concern that we hear is around liability.
Yes.
So that's what we haven't implemented it yet, so we do still have some hurdles to get over, but liability is the number one concern that we do hear from, because right now in our systems, the way they operate, we don't actually see a lot of the data in the center, right? We do Y copy, it drops down and it goes back out. So once we start doing things like centralized fraud, how are we going to manage all of that incremental data, quite sensitive data? And we currently don't have PII data in our system. So we're working through those, but everyone agrees of the advantage of having this consolidated network effect of data.
Yeah. Andy?
Two points to add. So you asked for the ugly, the bad and the ugly. One around overlay services, certainly in our experience, and this is down to technological design. You know, the real-time payment rail that we have, like most of Australia's systems, is not a system in terms of it's a rail. It's a set of distributed technology that sits in different financial institutions and also in the centre. And so when you're trying to build out overlay services, you actually need to get everybody to do that build, ideally at the same time, to get that network effect. And if you don't, it gets ugly, or at least it gets slow. On the sharing of financial crime information, this is my into scams. I wanted to talk about scams. So just on fraud, we set up an entity called the Australian Financial Crimes Exchange a few years ago now. And we found actually financial institutions are willing to share their fraud data in real time, and it makes a terrific amount of difference. And now it's going beyond financial institutions, and that going beyond is going to be really key when we start talking about scams. I think too often scams becomes a payments issue, and although we're all payments practitioners, I think we'd all recognise that every scam involves a payment, but that doesn't mean that every scam is a payment scam. Because they're not.
Yes,
you know, there might be investment scams or romance scams or whatever it might be. And that means actually to try and combat scams, certainly in our analysis and the way we're trying to think about it in Australia, is you need to share information across the whole life cycle of scams, and particularly with and from digital platforms, telcos, internet service providers, because they're the ones that have the information. They're actually the ones that can take action to stop scams at source. So it's partly sharing information, but it's also partly putting a set of obligations on every actor in the life cycle, including the consumer, including the financial institution, but including those that can actually stop this stuff at source.
Because what we see is it goes across the payment system. So a credit push fraud could be wire, instant payments, ACH. I know it's a debit, but it's a check. Check is a big fraud area for us. But it's trying to capture that data up here. And a lot of times, even if they see it, it's ex post. It's way after the fact, then trying to figure out what happened.
But I think even ex post data can be incredibly helpful. If you think about, I'm a financial institution, I've identified a fraudster, or I've identified a fraud vector, or I've identified a mule account, then sharing that information across the ecosystem helps combat those scammers. And let's face it, the bad guys share data really well. So as the good guys, we've got to share data as well as them.
Yeah, and it's really, we've been trying to get that going within the New Zealand context for some years now, and just it hasn't happened from that point of view. So really envious in terms of the capability that Australia has built. So there's certainly a willingness to share, but that sharing in our market tended to be all the fraud guys down the pub on a Friday night swapping notes. So there was no structure to it. So how do you make the right solutions if you can't see the data? And that's why it's so really important to have that, to share it, and be really transparent about it as well. So we're following suit, but certainly we're about 4 or 5 years behind the 8 ball compared with the Australian poster childs of the South Pacific.
And
Thanks,
setting up such a centralized fraud capability, Steve and Andy, and also Christina, what would be some of the challenges over and above just getting everybody to share data? Are there other issues and challenges?
Do you want to start, Steve?
No, in terms of, if we look at the new next generation platforms that are being developed, say like in the UAE or others, that is just part of what it does as part of that centralised fraud capability. So I think from our point of view, the main challenge is talking through with the industry in terms of what that looks like, what is the sort of information that we want to gather, and at what point is that intervention occurring, by whom and when. So it's just really those business requirements around what that should look like, and then build it out from there. So it's, I don't know, my mind's thinking it's reasonably straightforward, but I'm sure it's not.
There's sort of, in the Australian context, I think there's sort of, it's not good and bad and ugly, there's good and interesting. So the good is the fact that you've got richer data on the real-time payments platform, and that's really helpful. So because it's distributed technology, what we've seen is individual banks use that data really effectively. So it's not a confirmation of payee type ecosystem solution, but it is individual banks being able to analyse their flow, and certainly our largest bank, that flow is pretty significant. So they can, when you combine the ins and outs, they can see a lot of the ecosystem, and so therefore they can start to analyse what is a fraudulent payment, what is a mule account, etc. The interesting is the fact that real time may become non-real time. So as Steve kind of hinted at, the current debate here is around when do you add friction, and that's got a bit of a bad rap actually, because people kind of say, well, it's a real-time payment, it should be made in real time, why would you add friction? To me, it's actually no different to some of the work that we did a few years ago now on card not present fraud, where we said, well, if Steve is buying his usual shirt from his usual store every month, then that's a low-risk transaction. We're not going to add any friction to it. But if he's suddenly buying 10 laptops from Singapore, we'll ask him to prove it is him. And I kind of think it's a similar case in real-time payments. So I guess I agree with Steve that it's not actually that complicated. It is just, it is adding friction where we didn't think we'd previously need to add friction to say, well, actually it's a higher risk transaction. You need to
On the send side.
authenticate it. Yeah, on the send side. Interestingly, on the receive side, we are seeing some institutions pause the payment on the way in because they want to analyse the account it's going to. If it's a new account, that's high risk for them because, despite KYC, is that a fraudster?
Yeah. Very interesting. Now, while we're busy talking about overlay service, what is an overlay service in your view? Would Pay2, for instance, Andy, would that be a overlay capability?
It is an overlay service. So just to explain, Pay2, a bit like Steve was describing in the New Zealand situation, the way that MPP was built was it had a pretty good set of core capabilities. So it had smart addressing, it was real time, it was 24/7, 365, it was ISO 20022 enabled. So most of the through flow uses that capability. So it's not an overlay in the truest sense of it. It's just using the core capability. However, Pay2, ultimately the idea there is that it becomes a way of replacing direct debit. So it is going to match some of the use cases that we see currently over our ACH or direct entry. And it does that by enabling anyone, including a consumer or an approved third party, to create a mandate. Now that mandate could be for a one-off payment, but it could also be for a regular payment. So the obvious example is a gym subscription, classic direct debit use case. So Pay2 is definitely an overlay service. It has suffered from the problem I described earlier in terms of not everybody has moved to it at the same time. Some of our banks are live with it, some aren't. But as that rolls out across the network, then you will start to see the network effect and the benefits of that. And by the way, it is the reason why payment initiation through consumer data right may not happen, because effectively it looks like the same thing. There's a consent mechanism that goes with it from the consumer to authenticate a third party or consent to a third party to set up the mandate, etc. And it gets rid of some of the clunkiness that you have with direct debits around, I subscribe to the gym in January because I do every year, and then I want to stop the subscription. Actually much easier in an electronic mandate world than in a paper-based direct debit world.
Looks pretty close to what we have here in South Africa as debit check, however it works slightly differently. But one of the things you mention, and I think as CEOs you must have some wisdom about it, is how difficult it is to actually get a whole group of banks or a whole group across the line. You mentioned the overlay services, but Jane, I'm going to look at you first. A CEO in such a large jurisdiction, 10,000 banks, and they all have to make one change, or how does it work? How do you get everybody to play along?
Well, sometimes it's an endurance event. You just keep working on it. But I think that we've been incredibly lucky with the industry. I think about our ACH system up until 15 years ago, 20 years ago, we didn't have an enforcement mechanism within our system. And now and the financial institutions came together and said we need to have an enforcement mechanism that's meaningful, that's within the system that we administer now. So I mean, moving from having nothing to having a real self-regulatory system where we can enforce and levy fines significantly. And also if you're found that you've have a violation, that the regulators see that. So it really might not be about the fine, it's about the fact that you have a violation through the system. But I think that moving to several settlements a day means every financial institution, so when we moved to same-day ACH, meant every receiving financial institution in the country had to be ready to receive on the same day. So it might have taken us, I don't know, 3-5 years to get the rules passed and to get it effective, but on the same day everybody received. So that any financial institution then that wanted to send around the country could send anywhere. They weren't trying to sort through who's capable, who's not capable, because what we hear from corporates and from all users of the system is if I have to sort through to figure out who can receive or not receive or who can do whatever it is, they don't want to use it. They don't want to have that friction involved. So sometimes, I think, at least for us, it is finding that commonality. So you're going to have people on both sides, and it's trying to find that common space where everybody can come together And then what we do generally is once you get that commonality is start phasing other functionality in, right? So you get everybody to agree here. When we, with same day settlement on ACH, we phased it in, it was 3 phases. So they could look at 3 different dates that were coming up in the small dollar limit, small to start with, and then much more. I think Mike in the audience will probably tell me, I think we've had 8 different phases of same-day ACH, adding windows, moving up to $1 million, funds availability and all that, but it happened in a phased way, which people can live with maybe sometimes a little bit more easily.
So it's a slow game. It's a phased game.
Yeah,
It's a phased game.
Yeah.
it's a slow game.
But it's moving. I mean,
Yeah.
But it's moving all the time.
Yeah, because certainly the experience within New Zealand market is they tend to take a while to get to a decision point, but once they're there, the commitment to delivery is really, really good. So it's sort of like 5 years talking about it, 5 years doing it. And so from that point of view, that's quite useful. Unlike Jane, we've only got 14 direct settlement participants, and so they know each other pretty well. And so from that point of view, it's a lot easier for us to corral the cats to get them on the same page in terms of that. But I think the secret ingredient for me about all of this is a really clear process from the ground up. So with working groups, whether that's business, technical, the structures that you go through. So before taking on this role, I was never sort of that, process, let's just actually focus on the end outcome. No, the process is really, really important in this game, and it is a long game. That's why you find a lot of CEs and payment associations are there for a long time, because they want to see the outcomes of the fruits of the labour, and gosh, that takes a while.
And I think, there's nothing wrong with taking the next available space, right? Because you are keeping things moving forward, which is important. You've just got to have the vision for where you're trying to get to as well. I think a couple of other points. One is, I think you've got to be very good at strategic choice. So we've talked about what bets you're putting on. You've got to be equally clear about what bets you're not putting on.
Yeah.
So what are the things you're not doing?
Yep.
And that can be, that's why legacy is important, by the way, because our financial institutions will do the new things because they'll see the cost taken out of the old ones. So I think that's absolutely critical. The other one is having a big brother helps a lot. So we work very closely with the RBA, our central bank, and they're pretty good at setting expectations on industry and timelines for those expectations, and we're pretty good at responding to them, and that keeps everybody honest.
Yeah. And the other realisation is, speaking of bets, what you don't do, one thing is, as you're going on this longer term project, once you make the decision, say go, you've got to acknowledge that by the time it's implemented, it could be a little bit out of date. And that's particularly been evidenced by some of the real-time deployments over time. You can see that the ones that were put in 10 years ago are way different than the ones now. So when you make that call, just acknowledge, hey, it's probably going to be behind the 8 ball by the time it gets to market. But feel good about that because you've still made the decision, and it's still a significant improvement.
Yeah.
Just not as cool as the next one.
Yeah.
And I do think that so it's what you're going to do, what you're not going to do, and I think the risk side really is table stakes. So when we're talking to the industry, it's like the way we are able to do all the innovation and to change is if we can manage the risk part.
Yeah.
And for a long time, at least in the U.S., the risk was more associated around debit transactions. So we put a lot of rules into place around debit transactions to make sure that those were authorized debits. Now the world has completely changed, and it's credit push fraud. These credit frauds much more difficult to find, like the bad person, because you have to look at the receiving bank, because that's where the mule account is. That's where the vector for fraud could be coming in, where the synthetic identities are, all of that. And it's very opposite to how we've historically managed fraud. So we've spent several years putting together a new risk framework and looking at how do we kind of look at this in a different way, and how do we work with our receiving financial institutions to find out what they're seeing and have them help with the fight against fraud.
Yeah. We've got about 7 minutes left, and I want to go to a few questions as well from the audience. But one last question, what keeps you awake in terms of stuff that can come left side, blindside you, or black swan type situations or events? I'm not sure if you count CBDC and those kinds of things in with that. But you know what happens in the world of payment that worries you? And I'm going to start with you, Christina. Let's kind of work it back from you.
Well, I don't want to end on a depressing note. So I think within our organization, what keeps us up is largely fraud-centered. So that's our number one focus, our number one concern is particularly around cybersecurity. So that's what keeps us up, all of us up on our executive team at night.
Cybersecurity, big cyber
Big cyber.
events. Yeah.
Yeah, I'd concur. It's scams, resilience. If I can be a bit controversial, bad regulation is the thing I worry about. Knee-jerk reaction to events. And actually, we're sort of seeing some of that in the cyber and resilience space, I think. Some of the requirements that particularly banking regulators are putting on banks and actually through banks to third parties that banks are outsourcing to, just frankly nonsensical at the moment. And so, yeah, that isn't payment specific, but it has a payment impact. And so we try and stay really close to the regulators to try and preempt some of that.
You know, it's funny. So definitely risk and fraud, but it's generally the thing that happens to derail you a little bit isn't the thing that's keeping you up at night. It's the thing you weren't thinking about. So in the United States this past year, we had bank failures.
Wow.
That wasn't something that was on the, even on kind of out on the radar
Yeah.
at all until it was. And then it's, working with the regulators, making sure that the payment system, what we realized was that there was a lot of things written about checks and how checks clear, but nothing about, say, direct deposit or how ACH clears, and not enough. So we had to work to try to, every 10 years or so something happens. So it's interesting. It's the things that keep you up, but then it's the things that come out of left field that you just have to be ready for.
It's not systemically important until it is.
Until it is.
Yeah, and then it's too late. Yeah, so probably the one for me is around the longer term capability and capacity of the industry. So in terms of that, ISO 20022 globally saw a real capacity and capability shortage. And I don't know whether that was part of the Europe's issue in terms of kicking it down the road, but that's the one thing for me that just say, where are the new people coming within the sector to keep building, to keep innovating, to keep growing? How do we get them, and how do we stop flogging it from each other? Because that's not going to actually solve the problem. And so I think from that point of view, that longer term capability build for the right skill set is something that I know from our point of view, we put it up to the board, they say, oh yeah, that's good, priority 2 doesn't happen. And so that that conversation keeps going on, and it just really concerns me that we just don't have new blood coming through for
Not
an
urgent,
industry.
but it's critically important.
Absolutely, yeah.
And that's certainly something we also see here in South Africa. So I have to ask this question. So what are you doing about it?
Not as much as we need to be doing. So actually, as we speak, we've kicked off our first webinar series across the industry off the back of a failure to settle event to say that, they just didn't know what to do on the day. It was one of those delightful events where I get a phone call at 4 o'clock in the afternoon to say, should we have told you about this? And the answer was, yeah, you probably should have, but probably about an hour ago. And actually, I'm covered in sealant here because I'm up on the roof trying to fix it, but I'll get down and we'll kick some things off on the way through. True story, just at the end of that. But that really did highlight to me part of that capacity and capability issue. Not even understanding the core parts of the rules and standards around what they sign up for. So, yeah, that's a biggie.
Let's look at a few questions in the final 4 minutes or so that we have. The first one is around all of these systems living together, card, ACH, real time, and so on. The question is, are you seeing significant cannibalization happening in any space? Any of you can answer that.
Well, so real time has cannibalized direct entry, ACH, to some extent, but only a small extent. Jane is just far enough away so she doesn't kick me. We're happy if it cannibalizes it because ultimately we think direct entry is a legacy system. That's probably the main one. I mean, cash has been cannibalized massively, and didn't mention it earlier, but I mean, it is a focus of ours in terms of how we handle the decline in cash well, because there are some members of the community who will continue to rely on cash and want to use cash. But yeah, cash has definitely been cannibalised by a combination of card and account to account.
And I think that brings you. Sorry, you want to go, Jay?
Well, I just have to respond. I think our systems are very different. I don't think that they're a one-on-one equivalent to start with. What we saw with ACH was same-day ACH came right from ACH. Everybody thought it'll come from wire, it'll come from card, check, even cash. No, it all came from ACH. Most of it all came from ACH because they wanted more functionality. There's pent-up demand for that. What we're seeing right now, at least with the instant payment networks, is we're not seeing cannibalization at all. There are new use cases. So if it's the Uber driver who wants to get paid for every trip, that might not have been a classic ACH, even direct deposit use case to begin with. That might be coming through a real-time rail. It might be coming through card. So I think right now what we're seeing is people want options, and they want to have a lot of different options. They want to be able to say my payroll, sending out 100,000 payroll, and that's going next week or tonight at midnight. I want to make sure that happens overnight tonight on the ACH. Or they might say it's Saturday at 11:54 p.m. and I need to make 3 payments to different folks, and I want to be able to make them. So what we see is the payments pie keeps getting bigger. More and more and more payments. It's not a one-for-one at this or that. It is, I want this and that, so I can make payments decisions. So it's we look at the consumers and at the corporates to see how they want to be making payments.
Yeah. Thanks for that, Jane. I think we've basically run out of time. There's still a host of questions, so I want to invite the audience to interact with you in the course of this conference, and in the short time that we've had you up here, there's so much to learn and so much to also confirm, that we may see similar in what you are saying. So thank you very much, all 4 of you. Thanks so much.
More